Hello, everyone. Welcome back to the Rational Investors daily brief recap video. Unfortunately, I am doing this solo today. We don't have the mayor with me, so this might be a bit of a challenge, but we'll try and keep it to a nice 10 minutes. And of course, you might hear people bleeping away at me in the background. My apologies. But we'll try and get a nice 10-minute summary here for you of what we covered in the daily brief today. Obviously, the big news across the globe was a resolution of the G20 meeting that we were anticipating now for the past month or so. Of course, people that are crypto related, lots of talk about further regulations. I suppose when we talk about Bitcoin in our summary here, we can touch on that, but the long and short of it here is that event is now done, and we can see that the market is quickly repricing assets based on the outcome of that meeting. I think probably the biggest thing, and we'll get to it when we talk equities, but the biggest thing coming out of the meeting was basically Mr. Trump and Mr. Xi made peace. With this sort of very tertiary agreement that the Chinese would buy more U.S. agricultural products, and the Americans are going to lighten up on Huawei, or however you pronounce the big Chinese tech company in sales and business in the United States. I think the knee-jerk reaction out of that meeting, and of course, in the daily brief, we talked about key levels here. This was an important trend line test. U.S. dollar index itself has put in a cute little double bottom. We also, you could argue that Friday's action there heading into the G20 was a bit of a doji event. And we've gapped violently higher away from that. So that actually paints our Joby gap potential scenario. For all those people that took our educational program, this is a gap and go setup as well. So we're looking for further appreciation in the US dollar following the G20 event. On the flip side, its major trading partners, the euro and the yen. Euro's come off substantially. We did have a algo signal on the euro, which I believe basically you should have been stopped out at scratch. We came up, and really on all of these indexes, we talked about the S&P 500 algo signal and the NASDAQ signal. If we break trend lines, probably best just to hop off at scratch. It looks to me like this euro idea ran up, got within a whisker of our target, and has backed off to scratch here. So I'm kind of thinking we just sort of walk away at scratch on that. But the point that I'm trying to make here is, major repricing of a US dollar index, big break in the euro. There is a doji gap, a Joby gap set up actually bearishly now working on the euro. And of course, this is all open space here. If we do simple things like just draw simple trend lines off of these lows, you can see where short-term support is here. Probably a good, let's call it the better part of a penny lower on the euro at the very least. If this starts getting going in earnest, we're probably going to see a serious test of these lows. And that would just simply do nothing more than take the US dollar index right up against its old highs. Similarly, I like to talk about the relationship between the yen and gold. You can see that they've basically been moving in lockstep as we've been climbing higher and higher here. Yen has gone and fractaled. You could even argue, again, another Joby gap scenario, gap and go. So not only on the euro do we have Joby gap, gap and go, we also on yen have Joby gap, gap and go working. And of course, monstrous gaps to the downside on the yen, and even one way down here that seem to correspond with gaps on the gold. You can see the big old hole in the charts here on the gold chart that corresponds with that yen gap. And gold's got some funny business in through these areas that we could very easily see the gold market have to come down and basically find its basing here. Short-term price action definitely to the downside. And really on balance, this shouldn't surprise anybody at TRI. That's a heck of a one-way move. in both gold and yen, and a bit of cleaning up here. Typically, gold bottoms sort of mid-June, mid-July time period here. So actually seeing a bit of softness in this market here makes perfect sense to me. I suppose you could argue that Bitcoin, to a certain degree, has been enjoying that sort of flight, get out of the U.S. dollar. U.S. economy's collapsing. Trade war with China is making things worse and worse and worse. And now with that sort of trade sort of talk simmering down a little bit, not so frothy. Not a big surprise to see things like Bitcoin also back off. And you could make an argument very much like the gold and the yen. Bitcoin's got a whole bunch of gaps that needed to be filled to the downside. And of course, you know, in the broiler chickens video that we did yesterday, we talked at length about topping out patterns in the short term, CME events, mountain man levels. You know, we're actually starting to see potential divergences developing on things like the weekly price charts. So put it all together, if US dollar is enjoying a bit of a counter trend rally, in essence, risk off event, all of these sort of proxies, gold, yen, euro, they're all moving up in the face of a collapsing US dollar, Bitcoin moving up. They're all calming down, and so it shouldn't surprise us that Bitcoin's calming down a bit. Interesting, we've done this study with Thomas, and of course he talked about it at length in the daily brief today, how the inverse of the yields, and to do that, we just have the 10-year yield, TYX, 1 divided by gives us the inverse of this yield. And it's looking very, very toppy. And Thomas at length has been talking recently how the sort of talking heads in the media and stuff and, you know, analysis firms and stuff have drawn a lot of correlations between Bitcoin price and treasury bond prices. Again, another sort of flight to safety. We're worried about the economy, the system falling apart. We're going to run into bonds. And we've been talking lots about potential of yield curve inversions. If these yields actually are bottoming and starting to go up, remember this is an inverse, then actually that bodes pretty well for risk on assets. And actually, I was joking in the daily brief today. I got to say, if I was a bond trader and I had a pretty thick inventory of bonds right now and I looked at this price chart, I'd start to freak out. We got to be worried, you know, 1.618, good old golden ratio, stop that bull in its tracks. Hopefully everybody can see the pretty well-defined fractal and now double top that's potentially coming in. And just like the gold and the yen and Bitcoin, juicy gaps to the downside. And you can see this gap all the way down at the bottom here. There's no reason why bond market can't come screaming back down. And remember, that's usually what kills the stock market rallies, is that interest rates are heading up and people are freaking out. So, you know, I could very easily see a scenario where at the end of June, beginning of July, this is when the seasonal pivot should come into the stock market. I could very easily see a period where bonds actually underperform. Interest rates are heading up as capital slowly moves its way back into sort of growth ideas in the stock market. And to sort of dovetail to that, well, we didn't really get into specific new long ideas. I do see a whole bunch of our little stocks that we're interested in, especially like our TRI SOF group. They're starting to perk up. Bottoms are starting to come in. Remember, we said seasonally, end of June, beginning of July, we should see a pivot in the market and head back higher in sort of risk assets. And I thought it was just interesting coming out of that G20 event with the Americans sort of making peace with the Chinese to a certain degree. Keep in mind, that's a lot of rhetoric right now. We haven't seen anything concrete, but at the same time, too, you know, our watching China analogy, we have been watching, this is a weekly chart. If we put this down to a daily, you'll probably see it a little clearer. We've been watching this bullish bot setup on the Chinese stock market, and you can see they just moved to new highs. If they do and actually go and break these highs, then the botters, they can move their stop to scratch. and they're going to be looking for a good, from these current prices, a nice 20% appreciation in their stock market. Obviously, a little late to come to this trade now, since we haven't hit the move stop to scratch level. Any kind of pullbacks against the original bot breakout, which was technically that event right in there, gave you the opportunity to sneak in. If we consolidate and then we, put a nice inside bar or a nice little double bottom or, something along those lines against this level, we could seriously consider joining this trade. I would caution everybody, we are out of the second quarter. We're now officially into the third quarter. We are into the first 2 weeks study of the third quarter. So we have to actually now sort of pause and just listen to the market's message, try and figure out who is it that's actually driving the bus here. But a couple names that actually jumped out of my eyes, and I'm going to be keeping a close eye on them. The electric vehicle market is looking really interesting again here. Tesla seems to have survived its recent sort of carnage in the market. I noticed that my little Blink trade, and specifically the warrants, which I posted the chart in the lounge, they're starting to look really interesting. And then also, too, if the Americans and the Chinese are actually making peace, I actually think that there might be a potential in this Chinese electric vehicle proxy. And you can see the cute little double bottom that's trying to come in here. And of course, like we said, if we see Chinese stock indexes moving up nicely, then it would make sense that something like this could enjoy a nice seasonal rally through the latter part of the summer and into the early fall. That's, stock market wise, that's pretty business as usual. So this is a name I'm going to be watching closely over the next little while. Thank you very much, community, for pointing this chart out to me. And it's interesting that this chart pattern is starting to develop in the face of news like this. Norway, and take it for whatever it's worth, it's Norway, has actually announced that about half of all their vehicle sales now are electric vehicles. So, I tweeted out today, and this is sort of how I've been feeling. 17.5-year commodity cycles come to an end. It's going to be stuff like this that's going to basically mark the end of this commodity cycle. So we're starting to actually see the anecdotal evidence of why the cycle might come to an end and how it might come to an end. Okay, I think that's basically the summary I wanted to do for today. That is about 10 minutes. So keep your eyes peeled. Never a dull moment. Please understand, first 2 weeks of third quarter, we need to look at the market with a little bit of a jaundiced eye. We also, of course, have to take with a big grain of salt any sort of rhetoric out of Mr. Trump with regard to trade wars. That he has Wall Street in his back pocket, so there's obviously lots of positioning going on. And with a tweet, if he can move a market to make somebody happy, darn well he will. And then the last thing that I'll mention, of course, is that today is a Canadian holiday. I don't know whether it's a holiday in your country. Technically, I'm on vacation today, as if. But we also have the Americans. They're going to be on holiday through Thursday is July 4th. So this is a bit of a wonky trade week regardless. First 2 weeks of the new quarter, lots of holiday sessions in here. So if anything, the reason why we're not really pounding the table to go and load up on a bunch of stock here is I still think that there's a little bit of position squaring coming out of the end of last quarter and into this funny holiday week, and then following this crazy trade war talk. How much of the holiday session is actually driving price here versus natural supply and demand in the market? Okay, have yourselves a great day, everybody. All the best, and bye for now.